Hello, I'm Ezra Feldman, and today I'm going to be talking about gold. For much of recorded history, gold has had a stable and important place in the market, in commerce, and in trade, especially in the ancient world. As a rare and sought after commodity, gold has been a go to and very important safe haven for people who want to uh, keep their wealth stable and keep it safe from inflation and safe from other economic factors like uncertainty and crisis like we're seeing these days. Um, Gold has had its fair share of fluctuation in the economy and in the market, um, but that is usually attributed to uncertain economic times and a pessimistic outlook, or natural disasters and stuff like that. Uh, Over the past 5 years, and even broader over the past 20 years, gold has had a fairly upward trajectory. Not even fairly, it has had an upward trajectory, uh, even though it has had peaks and valleys in that climb to historic highs. So this 5 year graph shows that upward trajectory I was talking about, but also it shows definitive peaks and valleys, as you can see on the graph, and they're fairly frequent. Um, you can definitely see those having an impact on people and their outlook. Um, Now, if we look at 30 days, it's going to be much more volatile because the gold prices change constantly. Um, every hour, every half hour, gold prices are changing every second by, cents, 5 cents, 10 cents. Um, but most changes aren't cause for concern or problems, as a lot of forecasts and projections will bake all that in. Um, so big changes are something to keep your eye on, but don't be too worried because gold will stick around. So this 30-day graph definitely shows what I was talking about with the volatility. As you can see, that straight line, that's over a matter of hours, where it went from 1960 to, what was that, 1850. Yeah, I mean, the $100 jump in a couple of hours was definitely interesting to see. And it surprised me in my research because I didn't think gold changed that much during that short of a time, but apparently it does. Um, so for uses, the top 5 common uses are jewelry, finance, investing, electronics and computers, dentistry and medicine, and aerospace. So jewelry actually makes up a very significant portion of gold usage. About 78%, some people say 76, depends on the data you use. And a large portion of that jewelry is made in India. For investing in finance, for a very long time, 6,000 years plus, gold has been used as currency and has been seen as a safe haven and stable for uncertain times. So that's why a lot of people flock to gold and precious metals in general. Electronics and computers, gold is a great conductor and can carry those tiny electric currents for those intricate electronic pieces. Dentistry and medicine, gold is chemically inert and non-allergenic, so it makes great fillings, crowns, and bridges. And then for aerospace, gold is used as a lubricant, which I didn't know about. That was kind of cool to find out. And it protects people from radiation and heat. So the largest companies involved in the supply of gold are obviously mining companies. These numbers were kind of surprising at first because I didn't realize how much gold was being produced in the world. But once you start looking into the market, this is very normal. Newmont actually, that 195.7 tons of gold is up 40 tons from their 2018 production. So for people that think gold supply is going to slow down, the trends don't show that. And the top countries producing right now are China, Australia, and Russia. I didn't know about Australia's gold production, but they are very much up there. So the top consuming market for gold is jewelry, with around 78% of all gold going to jewelry. So for the top consuming company of gold is REL. So REL's main manufacturing is in Bangalore and Cochin, India, and then Dubai in the UAE. One thing I thought was pretty special about their process is they recover a lot of the waste gold, so that lowers the amount of waste that they have in the jewelry making process, which I thought was pretty cool and efficient. They also recently, in the past couple of years, purchased the largest gold refinery in the world. So, big moves. Imports, top 15 largest importers of gold based on the United States dollar in 2019, and the percentage next to the $1 billion number is the percent of total gold that they imported. So of the entire, pie of gold being imported, this is their percentage of it. So the UK definitely having a significant chunk of that. So for exporters, we have the top 10 exporters, and the numbers are very big, but I like the graph on the side because it actually showed that disparity between the top 3 and the rest of the top 10. So when you look at Australia and the United States, it's a 125-ton difference, which is massive. So I think that shows how the production in those countries is on a different scale. So major events, instead of 10 years, I went back 12 because the recession in 2008 is a very important event to look at for gold and gold prices. So I think that should be studied and is studied by a lot of people that try and predict gold prices and predict the outcomes of recessions. So the perspective that the financial crisis gave us is important because gold was on a major increase since 2001 and reached all-time highs, breaking $1,000. When the banks were starting to be bailed out, gold struggled and at one point lost 1/3 of its value. So the upside for gold and why it's important to stick with gold for the long term is after financial hardship and after crisis, people flock to gold and other precious metals, silver definitely, because they see it as a safe haven in a crisis. And I saw that word a lot, those words safe haven, because it really is true that when people are uncertain about the future, they will buy gold, they will buy silver, because it's important for them to have that security in their financial situation. So the next major event is pretty much the entire year of 2020. So in mid-March, we had the biggest single day drop off. And then again, we had another historic single day drop off in mid-March. And that's kind of crazy because in 2008, where we feel like gold was extremely volatile, it wasn't what we're seeing now. Like we're seeing huge swings in gold at a much faster pace than 2008. For the safe haven recovery where people flock to gold and it brings everything back to normal, that can take a long time. And I guess relatively not the longest time, but it can take years for gold to reach that point where it was at again. So it's important to stick with gold and to ride that roller coaster, because you don't want to sell very low and then your money isn't worth what it used to be in inflation. So it's important to stick with gold and to give it time to recover. For projections, many experts from investing sites, forecasting sites, they will tend to agree that gold can fall lower than it has already in 2020 because of projections for more lockdowns, worsening pandemic. You see it in Europe, you see it starting in the United States. Things are getting back to that lockdown, things are getting back to the pandemic. So they suggest, don't fall off of gold. Ride it out if you're able to, right? If you have that financial security, stick with gold. Don't panic, because they also agree to differing degrees, because not all of the forecasts are made on the same data. They do tend to agree, broadly speaking, that in 2021, we will recover in gold. We will recover from the pandemic, and it is definitely seen as a safe and reliable investment if you want to secure a part or, a good portion of your wealth. If you want it to be safe, if you want it to be in that safe haven category, definitely investing in gold, investing in precious metals. They say it will bounce back in 2021. And then projections for even 2025, they look at different inflation numbers. So investing, would I invest in gold? The answer is yes, and for a few reasons. So if gold dips down again around 1500, around 1600, it's shown that it will bounce back to 1900, 1800 area. So if it dips down during a second wave of lockdowns, during a second wave of coronavirus, if you have the spare capital, if you have financial security already, invest in gold. It will recover. That's what the historical data shows. So the hope is that gold will become a safeguard against uncertainty. It has in the past. It has for a very long time in the past. So if you are looking at uncertain financial times and you want to secure some of your wealth, the experts say gold, precious metals, silver, gold will be that safe haven for you. Thank you for listening. This was my gold presentation. I hope you enjoyed it.